Well, for the stock market, it was kind of topsy-turvy. I mean, the Dow closed down for the week. NASDAQ closed up. S&P closed off a little. So it was a mixed week for the markets, and the volume was not that big. Now, that said, come this week, it's the biggest week we've seen all year. We have about 116 companies reporting, and some of the biggest names in techs are reporting the fourth quarter. You got Apple, you got Tesla reporting, you got AT&T, you got a whole slew of tech companies reporting. So this could set the tone not only for the fourth quarter but for the rest of the year. The new administration may make changes. They're already saying that they want to, start unions going again. Now, those things are going to definitely affect the consumer. Biden's been out there with his pen signing executive orders all over the place, and he's closed down the pipeline. That's going to affect prices at the pump probably by March. And you could see them go up to $5 a gallon. So they're helping his base, that's for sure. But I think in the long run, these are going to hurt the economy because they're going to put people out of work. The pipeline here in Pennsylvania, closing that alone is going to cost 7,000 jobs in that neighborhood. So you're going to see the unemployment rolls go up, and that's all going to lead to a downside in the market. I believe you'll see the market, which, by the way, is probably the most expensive market right now in history. I've never seen prices this high, and I think you could see a bubble too. We've talked about this bubble in the tech industry. I think you could see a bubble right across the market come this late winter, early spring. I would stay on the sidelines. I wouldn't be investing any money in equities. Like I said, they're at an all-time high. They're very expensive right now. And I think if there is a correction coming, it could be pretty big. The coronavirus has not gone away. I mean, more and more people aren't dying, but the virus is spreading. More and more people are getting it. So that's weighing on the market too. But I think what's really going to weigh on the market are some of these changes that this new administration is going to make. The union the union ones are going to hurt the market. That's for certain. The pipeline, closing the pipeline is going to hurt. He's also opening the gates down south, so you get more illegal immigrants coming in. And that's that's a tax going to weigh on the taxes, especially in those states. Someone's got to pay for these people. So overall, I think we're going to see a market that's going to capitulate later on. Like I said, probably late winter and early spring. You could see a change here. And I would wait. I would watch the market carefully. You might see it go up a little now. You always got a honeymoon period with new administrations, so you could see a little bounce. But I think basically it's just, and you know what else, Jackie? If you look at the short sellers, they're not shorting anymore. People are not shorting anymore. So I guess they think they're going to cover and get out. But nothing going on out there good in the long term for markets. No, I agree. I think to come down to the floor, to the markets now in the U.S. might not be the best time. You could come down, have a great day, and a week later the market could be down 1,000 points. So I would wait to see what happens with these planned changes that this new administration wants to do. I do believe they're going to affect the market, though, Jackie. I don't see any way out of it. He's gone down this path, and he's got his base that wants it done. So I think he's going to do it. He can do it. He's got the House, he's got the Senate, and right now he's got that pen, and he's signing executive orders all over the place.